Apple had a great quarter of sales for the iPhone, Mac, and Apple Watch. But the stock is being dinged by a warning on much higher costs for the current quarter. Jim Suva covers Apple at Citi and joins us now. Jim, great to see you here this morning. Look, we were talking about at the top of the show. Surprised Apple shares are not down much more given their outlook for inflation. What's your play here?
Yeah, Brian, it's great to see you. First of all, I would note what's really important that's unique about Apple versus the other companies you're talking about is this is more of a demand push out. They've got what I call a good problem. The problem being demand is outpacing supply, and they could have hit even higher revenues. They beat by earnings by 6%. They beat by sales by 3%. They're talking about 4 to 8 billion with a B dollar of revenues they won't be able to hit in the June quarter. So it's a good problem. They can't meet demand. Now, regarding inflation, which is a big point, it's important to note that while Apple, many people think they keep their prices consistent, the reality is Apple has indeed increased pricing. The iPhone SE is now $529. It used to be $499. If you want the higher end of memory, you pay more for that. And when you go into stores during supply chain shortages, you can bet Apple's going to be stocking the higher memory, higher priced phones and iPads there. So that's why we believe the Apple stock isn't down that much. We view this pullback as a buying opportunity, and we have a $200 target price with the buy rating.
Hey, Jim, it's Julie here. I want to dig more into the numbers in a minute, but I do have a follow-up on the price of the phone specifically. Do you think the fact that so many more people now finance the phone and pay it out over time, that has given Apple more pricing power because there's not as much of an upfront hit for consumers as often?
Julia, that's a brilliant observation, Julie. And I got to say, importantly, not only is it that, but it also makes them stick and be part of the ecosystem and not really the ability to move to the Android ecosystem. But indeed, yes, instead of walking into a store with, say, $1,000 of cash in your pocket or to put it onto your credit card, if you can bill that out for an extra $30 per month, the as-a-service model is working, whether it be on streaming devices, whether it be on car payments. Now we're talking about iPhones. People love to pay things in payments rather than having the upfront cost of $1,000. In fact, over time, I wouldn't be surprised if this goes into other things like PCs and Macs also to make it, quote, more affordable. Now, the end price is still the same, but the timing of the cash flows, many people like to spread that out over time. Now, this is more of a United States phenomenon. Globally, most other countries have you pay the full upfront cost. But since this is catching on so much, we expect it to spread. But Julie, that's a perfect observation, and you're spot on.
These inflationary pressures, Jim, for Apple, this is huge. $4 billion to $8 billion. That is a massive hit. When you look at the next round of iPhones, how much in terms of price increases does Apple need to push through here to help offset some of that?
So, Brian, on the 4 to 8 billion, it's important to note the 4 to 8 billion is not necessarily a extra cost, but a COVID supply chain unable to ship the product item. So it's a revenue deferral or push out, not necessarily a material degradation. Some of their chip costs are getting higher, so their costs go up a little bit, but not nearly to the extent that you're seeing with the other industries that you were talking about earlier on your show today. So the $4 to $8 billion is simply they can't get enough iPhones and Macs in the stores to deliver to people. So it's not necessarily a cost, it's a revenue situation. And that's why the stock isn't down more. If it was only focused on costs, the stock would be down more. But the focus here is on they have too much demand and they can't meet the sales for the demand. And that's why the stock isn't down more.
Well, that's a high-class problem to have. And in terms of the next iPhone, how much could that cost?
Brian, we expect actually the pricing of the phones to be somewhat similar to what they are today. But what they tend to do is try to convince you to upgrade on the memory, to say your friends and family are so beautiful and handsome and these trips and events you're doing look so great. You should buy more memory. And you walk out of the store feeling good. feeling that your family and friends are handsome and beautiful and you actually made a good quality purchase. It's a very different selling process in the Apple store where people actually like to go in, unlike other places in society where you can buy electronics. So it's actually a good experience. We expect the pricing to be somewhat similar. And then, of course, we do expect some new products like AR and VR to come out as the year progresses also.
Jim, I want to ask about the one category of product that missed estimates as far as I saw, and that's the wearables, home and accessories. What do you think's going on there? And are you expecting a new watch in the fall that's going to turn that number around?
Yeah, so right now, the watch innovation, let's be honest, on the early parts of COVID, when government stimulus was going out to consumers, people had more discretionary income, especially if they were living in the basement or the home of their mother or father. Didn't have to pay rent, and the refrigerator was magical. It always had food. And so therefore, they used money to buy things such as iPhones and wearables. Now, to be honest, the Apple Watch continues to do more innovation, but also we expect that this area to continue to grow. It did grow year over year quite noticeably, but they did face some supply constraints there also. So all of this is more due to they can't meet enough demand. That's why the stock isn't being beat up or punished as much as other stocks on this. We do expect them to continue to innovate and launch more products. And on the watch specifically, and this is important, it's getting more and more into healthcare. So if elderly people or anybody falls down, it can detect a fall. It can call the ambulance or their loved ones to come help them. It can detect things such as oxygen and things like that. And in the future, it's going to be more and more involved and embraced by the healthcare industry. We view the Apple Watch as a very good, strong growth product, but it really comes back to the ecosystem. Apple makes products that work and people want, and it makes their lives better. And that's why we believe Apple's more of a platform company than just an iPhone or a wearables company. Well, maybe at some point the watch can also tell you that you and your family members are handsome and beautiful. Jim can do it all. Jim Suva of Citi, thank you so much for stopping by this morning. Great to have your insights on Apple.